Welcome, everybody. I am so excited that you are here today with this amazing presentation I'm going to talk to you about today. A couple of things I'm going to say to you today is some of it's going to probably upset you. I'm going to be honest with you. Some of it you're going to think about and say, that makes sense. And some of it you're going to say, let me give Reggie a call. And some of y'all probably say, I'm not going to even speak to him anymore. But I want you to know one thing. What I'm going to share with you today is solely to put you in a home and build your family's wealth. So you may not hear a bunch of pretty sounding words. I'm going to motivate you to do something, because what you're going to hear from me today is probably something that you've heard before, but hopefully I can say it in a way to make you take action. Before I get into my presentation, every presentation, I always like to give a segment on health. And doesn't do you any good to have the biggest house on the block and don't have the health to enjoy it, or have that dream home, you don't have the health to enjoy it. So if you can get out, walk, do some jumping jacks, whatever, some physical movement activity. But also you want to make sure you work on your mental as well, because we got all these different gadgets, AI, and all these tools that correct your spelling and finish your sentence and add this up and add that up and write this paper. So we don't want to lose that cognitive, mental appreciation that we should use. And lastly, make sure that you got your spiritual right. Now, I'm going to talk about a myriad of things, and I'm not going to talk too much about loans and mortgages. I'm going to touch on them because I'm not trying to make you a loan officer. I'm trying to make you understand how important it is to purchase a home and what it does for your family. So what I want you to do right now, if you got two screens or if you have your phone, I want you to go to my website, sebmtg.com. That's S as in Sam, E as in Edward, B as in boy, M as in Mary, T as in Tom, G as in go.com. And the reason I want you to remember that, and I want you to do it every day, 2 or 3 times a day, because I got so much information on there that I cannot cover if I talk to you for a whole year. We got blogs on there. We got a calculator that will give you what your rent payment is versus if you had a mortgage. It'll let you know what your mortgage payment. It'll let you know what the current rates are. And I even have a chat bot. It's a purple button at the bottom right. You can type anything in there and it's going to tell you about loans. And if it doesn't tell you about a loan, it's going to put you in contact with me. You can schedule an appointment with me. You can do whatever you want, but you need to make that website your best friend. I got a strong team behind me, and they put that website together. They make sure everything is good, and so it could serve you. All right? Fair enough. Let's go. So we're going to talk about 5 quick things. It's going to take me about 20, 25 minutes. The real fears, facts versus noise, your mindset shift, what's possible, and the wealth factor. So let me share this with you really quick. The real fears, that is what hold people back. Your fear of failure, fear of the unknown, fear of being ridiculed. I live by this motto: do what you fear most. That's the only thing you're gonna come over. It's a fear to own a home because you're thinking about a $300,000 payment, and you in your mind, I'm never gonna be able to pay off $300,000. And what if I can't make the payment? What if you can make the payment? The next one is facts versus noise. Don't let misinformation be your guiding post. We hear so much noise on the internet and from people who don't own a home, or not even just owning a home, just other people's opinion. And we take what they say as gospel. If it's written down, we think is right. If it's said on the internet, we think is right. Not necessarily. Now, I'm not telling you not to do your homework, but I'm telling you we need to do more than just reading the first line and saying that's the perfect thing and I'm going to believe that. You need to be able to weed through that. The third one is that mindset. And I love this one because I always equate this with start new habits. We always think that a habit has to be a bad habit. No, 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 no. We got good habits. And we need to train our mind to get those good habits. A good habit is I'm going to put some money away and save for a down payment. Good habit is I'm going to pay that credit card off so I can have a better credit score. A good habit is I'm going to the gym. That bad habit, don't worry about it. You don't need to go to the gym today. You're tired. You worked hard. And then you justify it. No, we don't want that. And possible. I love this one. Possible is often achieved by those who refuse to not stop trying. Let me say that again. Possible is often achieved by those who refuse to not stop trying. Keep trying. There are so many possibilities in your head. We put a man on the moon. Some of y'all don't believe it, but whatever the case may be, there's a man on the moon. You fly from city to city on an airplane. That's possible. People didn't think about that. We got cars that's driving themselves. That's possible. So it's possible to own a home. The wealth factor. Make every dollar that you make work for you. Make every dollar you make work for you. And that's what we're going to talk about owning a home. So here goes some of the most common fears holding you back. Interest rate, that's the biggest thing. That's the one thing that we hear all the time as a loan officer. What are the interest rates? Are the interest rates low? I'm going to ask you this question. What is a low interest rate? You probably don't know, but that's something normal that you hear all the time, a low interest rate. When you got that credit card that was 28%, when you applied for it, did you even look at the interest rate? All you saw that you can get approved for a credit card, you got a credit limit at $5,000. I told you this wasn't going to be a pretty conversation, but I'm saying it this way so you can put stuff in perspective and say, wow, let me see what Reggie's talking about. It seems good. Maybe I need to go through his checklist and write some things off that I can do better. You don't look at that interest rate when you get that credit card. You just get it and use it. 6.3% interest rate. Some people are losing their mind. Other people who know better say, wow, give me that rate. Let's move on. Some people are afraid to buy because of the market may crash or this may happen. So what? You still have to go to work every day to pay the person that you're renting from. Nothing changed. Well, what if they foreclose on me? If you get foreclosed on, that means you're going to get kicked out of your rental place too. So nothing's changed. The only thing that changes if, let's say, the worst thing in the world happened, calamity happened, and you can't pay your mortgage. It takes months and months and months to put you out of a home. And then they'll restructure your payment. The bank don't want the house back. They want you to work. They want to work out a plan with you so you can pay the home back. You can even file bankruptcy and not even put your house into bankruptcy. You can't do that if you're renting. The landlord wants you out in 30 days. 30 days. These are common fears, and I'm not beating you up. I know I said it's going to be rough, but I'm really not. I'm just trying to bring this into the forefront so you can think about it. The rising costs, insurance may go up, taxes may go up, the maintenance on the house may go up. I didn't plan on this. Same thing happens when you rent. If the insurance goes up on the landlord, he raises your rent. Taxes goes up, he raises your rent. You call him too many times to come fix something, he raises your rent. Yeah, yeah. But you think it's easier to call the landlord and he's raising your rent. Time and paralysis. This is a myth that now is not the right time. I'm going to be honest with you. It's never the right time to buy a house. It's never the right time to do this. It's never the right time to do that. It's not the right time to plan a family. Start with what tools you have and better tools will come along. Do not say it's not the right time because you don't even have the answer. When is the right time? You know how many people I ask that? It's not the right time. What's the right time? I need to save more money. Well, how much money do you have now? 6,000. That's the right time. What is your credit score? I don't know. Well, let's look at it. Oh, that's the right time. How long you been on your job? 2 years. That's the right time. Even if you don't have one of the three, it's still the right time to start the process. That's all the right time means. Let's start the process. You don't know when the right time is because this is not your specialty. But let me back up a little bit. I appreciate you looking at this video or joining this webinar because you've made the first step. You did. I know I came out guns a-blazing, but you've made the first step. And most people don't make that first step because buying a home is really simple. It's not easy, but it's simple. It really is. And once you buy one, you're going to say, I can buy another one, and I can buy another one, and I can buy another one. Now, let me stop pointing the finger at you right now. I'm not going to point the finger at you anymore. Well, not on this slide. Well, maybe a little. So let's look at block number 2 and block number 1. So block number 1 said every month you rent is 100% interest rate. You gain $0 in assets, appreciate while your landlord builds wealth. Let me tell you what that means. You're paying your landlord 100% interest rate. None of that money you see back. If you pay him $2,000 a month, you're paying him $24,000 a year. He gets to write that off on his taxes. He gets to take that money and go on a vacation with his family. He gets to send his kids to college off of your rent money. That's what he's doing. Now, if you were to take that same $2,000 a month and you made a mortgage payment, several things are happening. You're building equity. When every time you make a monthly payment on your mortgage, a portion of that money goes towards your principal, and the other portion goes towards your interest. The interest, you'll get a statement at the end of the year. You can write that interest off on your taxes. So what does that mean? More money back for you. The principal part means you're pulling the equity down pulling the principal down in your home when you make that principal payment, and you're building equity. It's like putting money in the bank with gaining interest. That's what it's like. Now, the second block, let's talk about that second block. That second block say 2.2% forecast growth over 2026. That means the equity that you're growing in your house. I actually put that as a low number. The actual number is anywhere between 3 and 5%. 3 and 5%, you can grow your home in equity just by being there. The house will automatically grow in equity. So let me share with you a story that just happened to me this week. Young man, he wants to buy a home, and I already have the numbers figured out. He wants to buy a home, but then he said, let me wait. The home he wants to buy is $300,000. $300,000. And let's say the home only appreciates 2%, not 2.2, not 3, not 5, not 4, but 2%. That same home 1 year from today will be $306,000. Let's say he waits again. That same home at 2% in year 2 would be 312. Year 3, 318. Year 4, 324. Year 5, $330,000. Now, let me share with you where he lost money. If he bought in year 1, let's say he did. I say, hey, he saved, did whatever he needed to do in year 1. He lost $6,000 because he had to bring $306,000 to closing instead of $300,000. And if he waited 2 years, it increased. He could have used that money. So he bought the house in year 1. And then at the end of that year, he has an equity of $6,000. Plus he get to write it off for his interest at the end of the year. And the payments that he were making went toward the principal, which made that $6,000 even bigger. It may have been $7,000. That's what I talk about when I talk about building wealth with families and what's going on and how all of this works. Inventory, reduced power as inventory remains 12% below norms in 2020 norms. What that means is inventory is something that realtors look at and is supply and demand. If you have a lot of houses on the market, that's what we call a buyer's market. If it's not a lot of hires on the market, it's a seller's market because they can dictate what they want and more people are being competitive for that home. And if there are more people competing, I mean the price is going to go up. That doesn't work well for you. So those are some reasons why I think you should exercise your buying power and use the tools that you have now and the tools that you can find on SEB Mortgage website. You can use those tools to see what you need to do so you can purchase now. Some of you all will be able to purchase in 30 days. Some of you all will be able to purchase in 18 months or 6 months. We'll start the process now. Facts versus noise. Facts versus noise. Today's news cycle thrives on fear, housing bubble, headlines drive clicks, but market fundamentals tell a different story. Do your research. Some things on the internet are true and some are not true. Some are facts, some are fiction. But everything on social media, mostly everything on social media, in fact, go by clicks, and people measure how many clicks. More clicks they get, more money they get, more exposure they get. So sometimes they'll put a false or misleading headline. Beyonce falls. You open up the headline and Beyonce falls is another person, not even the Beyonce that you're thinking, or it is the Beyonce you're thinking, and she made a new album that called Falls, or whatever the case may be. They try to trick you with certain information. And that's where we come in at SEB Mortgage. We do not want to have you to be misled. And now let me share this with you as well. It's not always the social media and the news. It's also the people that you work with, other people's opinions. I mentioned that earlier. Other people's opinions, we tend to listen to people who do not have the knowledge in the area that we want to go in because we admire them or we respect them or they're our friend. We tend to listen to what they're saying. And they don't have a clue. They mean well, but they don't have a clue what they're telling you. So they're not trying to mislead you. They're telling you, they're trying to tell you well. Now, this site has nothing to do with you. This site right here tells me everything, but it tells you nothing. And I wanted you to look at this because these are some sites that come out and they'll talk about the inventory. Oh, the inventory is 8.9 year over year listing. Home growth is 2.2 and sales volume increase. That is part of the market. That is what drives interest rates. Interest rates are not, for mortgages, are not driven when you hear on the news the Fed funds have increased the interest rate or they've decreased the interest rate. That's not what happens. It is driven by the 10-year treasury, but that is something that how the economy is doing. If you're spending money, if you're not spending, I mean the entire country, if they're spending money, if you're not spending money, if people buying cars and houses and shoes and clothes and they're going out to eat, all of that ties into the health of the economy, and that is what drives the market rates. Now, interest rates on mortgages, they are like the prices of gas at the gas pump. They change every day and sometimes 2 or 3 times a day. So the rate today is not going to be the same rate maybe at 12 o'clock or tomorrow, or it may be better, maybe worse. No one has a crystal ball. But hey, ask us what you think the rates are. We'll tell you. It's a guess. We tell what rates are hovering around, but we don't have an exact interest rate. This is my favorite one, and I told you the mindset from fear to focus. If we can conquer that fear and we can change that bad habit into some good habits, we can afford a house. We can afford a house. You worked at a job for 5 years. You have to be to work at 7 o'clock. When you wake up at 5:30 every morning. Your body knows to wake up. Your mind knows to wake up. It does. And the reason it knows to wake up is because it's a habit. You go on vacation, guess what? You still wake up at 5:30. It's a habit. It's a good habit, so you're not late at work. Well, let's work on some more other good habits. Let's work on uh, writing down. I'm purchasing. I own a home. I'm gonna purchase a home on August 2026 or August 2027. Let's look at it. Let's work on it. Let's go to the website. Let's talk to Reggie. Let's put a plan together. Let's do that. Tell somebody. Most of us don't want to tell somebody I'm gonna buy a house because you're afraid if it doesn't happen that they're gonna laugh or talk about you. No, tell them. It holds you accountable. It makes you work harder. Now, I share with you, I'm not going to talk a whole lot about mortgages, but I am going to tell you what it takes to get a mortgage and the different programs that we got that can help you. But I wanted to share with you earlier that owning a home and buying a home is a mindset. We'll look at everything, we'll say rates are too high, I can never afford it. We'll look at the opportunity and we'll say there are no programs for me. I had a young lady one time, this was years ago, probably about 10, 15 years ago. And she made $15 an hour, had excellent credit, and she had to bring $6,000 to closing. I'll never forget her. She worked at J. Crew, and she had to bring $6,000 to closing. Had her qualified and everything. We just need to find the money for her. And she told me, Reggie, I would never, ever have $6,000. She thought that was a feat that she could never, ever accomplish in her mind. Not 6,000 at one time, maybe over several years, $6,000 in her mind would have come through her hands, but she thought she would never get $6,000. Now, I didn't close her. It's not a beautiful ending like, wow, I talked to her and we did all this and we closed along. I didn't close her. Never heard from her again because she in her mind, her thinking was so disturbed and upset that she had to bring $6,000 when she thought was an unattainable goal that I never heard from her. I hope she have a home. I hope someone else who has spoken with her convinced her that she can afford a home and we can figure out ways to get $6,000. There are ways we can get money if you don't have it. I don't even want you to worry about not having the money. I don't even want you to worry about your credit score. I don't want you to worry about your income. I'll ask you those questions, but we'll go through it and we'll figure out what we need to do to get you there. Now, let me talk about loan programs. These are some loan programs I think are very good, and that's going to help you. There are many different loan programs. If you're a veteran of the military or you're in the military, we can get you 100% financing. Easy peasy. But if you're a civilian, regular person, we got other loans that get you 100% financing. We got several loans that can get you 100% financing. Those are the loans that we have, but most people don't know about it. Now, let me share this with you. No misleading here. 100% financing, you're still gonna have to bring some money to closing. You're not gonna get a loan for free. There are some people that don't have to bring money to closing, but that's when the moon and the stars and everything lined up. And I don't want you to come in here thinking that you're going to get a house without any money. If it's possible that we can structure where you don't have to bring money to closing, yes, we will. But I want to make sure that you understand that money will be coming from you to help you get a home. Either you or a family member, you can get a gift or something like that. Your 401k, anything. We have certain loans for medical professionals, teachers, doctors, lawyers. Well, not lawyers, you get a regular loan if you're a lawyer, but we do have for medical professions. We have people who have a lot of money in the bank and you don't want to show your income. We can use the money in your bank to calculate your income to qualify you for a loan. So there are different loan programs. I really, really need you to, when you go to that website, look up the different programs. Ask them what's an FHA loan. Ask them what's a veteran loan. Ask them those. Now, here goes some affordability hacks. Affordability hacks is something that a lot of people don't think about. When I talk to a person about purchasing a home, I talk to them about several different things. Actually having a roof over my head and making that a safe haven, that's actually the last thing. That's number 3 on my list. Number 1, How can I make my home make money for me right away? How can I leave a legacy, wealth legacy? So let's talk about uh, your house making money for you. You can rent your home out. That's one way. And what I mean by renting your home out, they have something called peer space. I know several people who do this. Their house is nice, it's clean. A lot of companies will rent your home for the day, and they'll rent it and have a retreat just to get the team out of the office, and they'll go to your house and they got a kitchen, they can cook, and TVs, you got a living room, and you got a nice backyard, and they will bond and have a good time, and you're out of the office, you're relaxed. So while you at your job, you rent your house out for $5, $6, $7, $800,000. When you get home, you got a paycheck and your house is cleaned up like no one has ever been there. That's one way. You can rent a room out in your house. I know a lot of people rent a room out. You can build what's called an ADU in your backyard and rent that out. So there are different ways that you can make money on your home. Now, when I say building wealth, you can keep your home, and if you ever got into any trouble, I mean in credit card debt or something like that, you can refinance your house and pay off your credit card debt. You can't do that when you rent. You can't do that. You can't build an ADU in the backyard of the person's home that you're renting from. You can't refinance the house you're renting, but the owner can. Those are benefits for owning a home. And the price of homes right now, they may seem up, but people are starting to save a little more money with homes now, because more than rent. They're saving money by buying a house opposed to renting, because those are where the numbers are. And it's making it easier for you to purchase a home. Now, let me talk about loans. I've given you the foundation of owning a home. Let me give you the steps. It's simple, but not easy. The first thing is your why. Why do I want a home? I want a home because I want to put my kids in a stable foundation. I don't want someone to come and say I have to move. I want to be in a nice neighborhood. I want to be in this school district. I want to paint the walls purple. I want my own backyard. I want to put a pergola out there, or a gazebo. Whatever you want, write your why down. Right there, when you write that sentence down, I am going to own a house on this date. I bought a house on this date. While you got SEBMTG.com written down, so you can keep going to the website. That's number one. And we can help you write that, to put that together. The second thing is your financial check. We look at income, assets, and credit. Those are the only things that I look at in the beginning. And I can work with all of them. Everyone, no matter where your income is, your assets, or your credit, we'll work with you to get it where we need. That's all we need to do. And even if you think it's bad or you know it's bad, you need to complete an application anyway and let us look at your application. Now, many of you are going to say my credit score, and I don't want you pulling my credit score. Let me kill that myth right now. Your credit scores do not drop when I pull your credit. The only time the credit scores drop is when multiple people pull your credit against a car, a credit card, a Macy's store, a mortgage company, multiple different industries pulling your credit. That's when your credit score may drop a point or two. But guess what? It's going to boost it when you buy a house. Your credit get boosted when you purchase a home. So let me look at that. Don't be afraid to come to me. I'm the person you need to talk to. When I look at that, I give you a pre-approval. Once I give you the pre-approval, guess what? You give it to your realtor. Your realtor go out and you find you that home. You have that home. Give me 20 days. I'm gonna have you in that home. We're gonna make sure you keep that home. We're gonna make sure the value of that home is around so you can use it the way you want to. Send your kids to college. Get your write-off at the end of the year and build that wealth. That's what we do at SEB Mortgage. It's simple, but not easy. The easy part comes in is if you don't get me what I need when I want. I know I'm gonna do my part. My team is gonna do what we need to get you in that home. I just need you to do as I asked, to get you to the finish line. This is a staggering statistic. You need to look it up. if you don't believe me. The median homeowner net worth is $400,000, while the median renter net worth is $10,400. So the same person that you're sitting next to at work, who makes the same amount of money you do, y'all talk and laugh and go to lunch together every day, if they own and you rent, the median homeowner's net worth is $400,000 because they own a home. And they have a cushion to go back on if they need to refinance or send their kid to college. The neighbor that's owning and where you're renting, that neighbor's net worth is $400,000. I want you to think about that. Hey, I really enjoyed speaking with you. This is fantastic. Everything that I shared with you today, I know it came to you a little rough. It's not the normal presentations. It wasn't one of those ones that give you all these facts and figures and numbers, and you supposed to, at the end, say, what is this? It was meant and it was said in a way that I hope that you think about it and take some action. We're going to give presentations every week, and every week is going to be something like this. I want you to give me a call. You can reach me on my personal cell phone, 804-426-5377. You also can go to their website. It's at the bottom, sebmtg.com. You can book an appointment with me there, or you can just go in there and play on that website. I want to see you on there. I really enjoy speaking with you. And one more thing, don't let the start stop you.